You have to be qualified. So that means you have to have some cash, you have to have reserves. Sometimes lenders are going to want you to make a deposit with them. If you use a local or commercial regional bank, they are relationship driven, meaning they want your money in their bank because that's how they make money, by building up deposits, levering that, and then loaning money out. That's how they profit. So they are there to make money, and they make money by lending money, and they make money by having deposit accounts. So be prepared to make a deposit in the bank. That's just part of the relationship process with a local, regional, commercial bank. And then above reserves, you want to have some cash, you want to have some reserves, you got to have some good credit, and you want to make sure that you have assets. And if you don't, that's okay. You can get started without assets as long as the project in itself has equity in it, or you have good credit, good reserves, good income, things like that. And you want to get your financial package in order. That means all of your last 3 years tax returns minimum, any profit and loss, current profit and loss balance sheets for any businesses you're involved in, and then of course your personal financial statement, which lists all your assets and liabilities, current assets, current liabilities, and all of your long-term debts and things like that to get down to your net worth. So those are the types of things you want to have put together. You want to have that all packaged up nice and neat and ready to send off after you meet with the bank. So when you do your first meeting with the bank, you don't want to necessarily bring all that in with you. It's just sitting down, getting to know them, find out what kind of loans they're interested in, what type of projects they like to lend on, what kind of businesses they like to lend to purchase, what their lending limits are, whether or not it has to go to committee, how their process works, things like that. When you ask questions like that, the lender knows you know what you're doing. So once you have that initial meeting to find out if what you're looking to do is in their wheelhouse, then you follow up with an email and a complete financial package along with the loan request that you're looking for. So you just put together a little executive summary. You have your financial package completely put together in a little PDF, and you always want to keep that up to date and ready to fire off at a moment's notice because they will ask for it again. You always have to send that out 2 or 3 times when you're in a loan request process. Then you want to have a small executive summary of what it is you're seeking. So I want to borrow X amount of dollars to do X, and the investment's going to be worth X. The business plan is Y, and I'm going to repay you your money because of Z. So it just has to be a business plan. So for instance, I want to borrow $1 million to build a little townhouse development. The land is $200,000. Building cost is $600,000. I've got $200,000 in equity in it from a loan standpoint, and the end value is going to be $1.4 million. So there's a $600,000 profit margin. The bank's going to feel comfortable in that. I'm going to supply all the supporting documents, contracts, specifications, plans, things like that, so that the bank can evaluate it. Contracts with general contractors, plans, specs, those types of things. Then the bank can evaluate the package, your financials, the project you want to do, make a decision, and provide you with a term sheet of the loan terms and conditions to which they're willing to lend you the money, so you can decide if you want to move forward with it. And then once you do, they're going to do the appraisal and all that kind of stuff. So you don't need to get an appraisal, but you do need to provide them with a value. And it can be a broker's opinion, it could be your own statement of the value, but if you have a third party validated, that's always best, unless the lender knows you and you have a relationship and they know you know what you're doing, and they just take your word for it for the values for the initial term sheet, and they're always going to base it on the appraised value or cost, whichever is lower. Before you get to the closing table, they're going to order all the title reports and appraisals and all that kind of good stuff. Well, the lender won't do the title report, but your closing attorney will, or title company.